And now let's talk a bit about gold as promised. Off its highs of the day, still up more than 26% over the past year. Do you buy or sell gold? It's a big question. And we know, obviously, a lot of different points of view out of there, especially after Warren Buffett recently said he was a bit cautious. Here to discuss, Tom O'Brien, editor of The Gold Report, and Jimmy Oreo, TJM Institutional Services Director and Options Action Contributor. First, Jimmy Oreo, make the bull case for why gold will go up and how far from here.
Well, actually, you look at the last 5 weeks, and in this business we talk about geopolitical risk all the time. Well, this is geopolitical reality. The situation has deteriorated very rapidly over the last 5 weeks. We've seen two fairly comparatively stable regimes. I know you might wince when I say Libya is a stable regime, but it's been 30 years of one dictator.
Yeah.
And in that time, the dollar has traded down between 1% and 2%, and gold has traded up 7%. To me, that clearly means that the dollar has kind of lost its place in the safe haven list. So that list has become relatively short. It's the Swiss franc, it's silver, it's the Aussie dollar, and it's gold. And those things become much more important as that list grows shorter. Today, when the rumor circulated that Gaddafi was negotiating his exit, and that was going to be a resolved situation, we were supposed to sell gold. That, to me, that seems ridiculous. To me, it seems like it emboldens the rest of the Middle East and North Africa.
Yeah, then you have complete chaos.
Exactly, right. So to me, you cannot be short gold right now, is my opinion. And yes, it's going to be a wild ride because the trade gets overcrowded at times.
All right, Tom, what about you? Can you make the other case?
Absolutely, Erin. You know, since November 4th, we have had a distribution in a big way. November 4th, we hit a high. We hit one in December. This morning, what we did is that we got over those highs. We did that like with 150,000 contracts versus 225,000 contracts at those highs. Now, Jim knows, okay, where the push comes, you have 75,000 less contracts at highs, okay? You fail at the highs, it wants to go to the lows. That's the first part. This part here, which is the dollar index, is a big one. Since 2003, the CTFC, the information last week was the largest short position in the dollar index, yet the bears couldn't push the dollar and break the dollar this morning. It rejected the lows. We add that with, people talk about the deficit no one wants in the dollar. My take is go long America. And that's the take in China. That's the take in Japan. China bought more long-term bonds, cashed in their short-term ones. Japan owns more long-term bonds. You put that together, bottom line is that to me, the gold wants to come back quite a bit.
All right.
Tom, from a technical standpoint, you make the argument of the dollar. Okay, it bounced off a technical level that was 3 years old. I mean, to bounce off it once doesn't seem very significant. It's going to go back and challenge it.
No, that's not 3 years old. The low in the dollar is 70, Jim, in 2008. But I do owe you a steak from last time. I owe you a steak in Chicago from last time.
We'll have to have you back to talk about the dollar. Tom's target, though, for gold as low as $12.26 over the next 4 to 6 weeks. And when it comes to Jimmy Oreo, he's looking at $15.70 over the next 2 months. There's a bull bear.